Good morning, traders. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning, YouTube. Good morning, traders. Bennett Tyndall again with TradingAnalysis.com. Thank you so much for tuning in this morning. Happy Wednesday, August 19th to you guys as we watch the markets continue to press higher in line with our sentiment from last week that we're coming out of potentially a major fourth wave within the NDX, looking for continuation higher into those upside fifth wave projection zones. So let's take a quick peek here. Actually, before we dive into the charts, of course, we have NVIDIA reporting earnings. That's going to be a key watch. Obviously, we are in kind of our last week of earnings here for the S&P. I think we had around 5% reporting this week. We heard from Walmart, Home Depot, so obviously interested in the health of the consumer. Without further ado, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing, gentlemen?
Hey, Bennett.
Good morning, Bennett.
Good morning. Good morning, Terry.
Good morning, guys.
Good morning, guys. How's everybody?
Doing well, doing well. What about yourself?
Spent all day watering the yard yesterday. It's been dry here for the last 2 or 3 weeks. The grass is dying.
It's been warm. It certainly has been warm. I like to ask Alexa what the, and there she's responding across the room, what the hottest place in the world is right now, and she's probably going to respond. But what was it? Furnace Creek, California got up to 124 or 130 degrees. Just absolutely incredible. So it's a hot summer, and it's following a very interesting first half of the year. And of course, we've, what, 3 months from election season. So 2020, we'll see what comes next. But hey, Terry, do you water your foundation?
No, I don't need to.
Okay, yeah, we're in an area here that's kind of prone to foundation issues, and that was one thing that was mentioned to me. It's like, water your foundation. I'm like, wait, what?
If you get a little bit further south, the soil gets more clayish. Where I am, it's more sandy, rocky, so I don't have that problem. But in that clay gumbo that they have along the coast, you generally, if you get into a drought situation, you should water around your foundation, because the soil contracts so much it can actually pull away, and then your foundation sags, and you start getting cracks in your house and all that. So
yeah, in
that
fact,
is a problem.
The realtor showed an example and pointed out a house where it was like 2 inches of separation between the foundation and the dirt. And it's like, oh my goodness, get some drip irrigation or something going. So anyways, enough with that. Alex, how are things in your neck of the woods? Doing well?
Yeah, as all the world, kind of a high temperature. People are kind of relaxing because we have a better situation regarding COVID. So few borders are open, so some of the people are concerning going at the coast. So it's looking a bit better.
The good old coast. It's always fun to get away. Yeah, it's I've been tracking the various progressions in different parts of the world, and we'll see who gets to the vaccine first. I know that's what many are interested in. So glad to hear you're doing well. Hey, how's your son doing? Doing all right?
Well, he has a few therapies. One, I think 3 left. He went actually now to get one. But you know, when you're training some type of a sport, this is casual, so it's nothing serious.
Yep, it's
so he will be okay. He will be okay.
Good. Glad to hear that. Yeah, we gotta take care of our bodies. It's important. So traders, let's jump into it and take a quick peek at what's happening here in the markets. As you guys saw just out of the open there, we've got 37 minutes or so until the bell. And as we looked at last week, in fact, let's just jump right over to the NDX. I'm going to skip the S&P here just briefly. We're going to come back to that and kind of highlight some potential wave progressions here. So zooming into this wave count that we have that originates obviously off of that March low, we see the markets as in the higher degree fifth wave. And as you can see here, we've got a good progression of squared up corrections. So we have wave 4 here squaring up to wave 2. We looked at that last week. And if it gets you off the daily and even down to a 20-minute chart, which we typically don't go down this far, but when we're trying to kind of verify the integrity of the substructure of this wave count, it does help to kind of dive down into it and take a look at some of the smallest degrees of trend. So on the daily, that blue fourth wave, as you can see here, we're counting this as up in 1, down into another 1, 2. Here's your common third wave acceleration gap. The overall wave 1 of the higher degree fifth we're proposing came to completion August 6th. We then have a 3-wave correction kind of back to close that acceleration gap. From there, as you can see, we printed another 5-wave move up and a 3-wave move back down. Here's just some interesting resistance and support levels that many kind of fail to take into consideration when working with Elliott wave. As you can see here, we have a zone of resistance. That zone of resistance was tested. We consolidated. We broke through it. We tried to hold it. We kind of failed. We came back down, tested a lower support line. This support line held. We went up, ran into that resistance again, confirmed this is support, and now we've gapped through that. This could very potentially well be a 1-2 of that higher degree third wave. So if you take a look at the progression here, we've got a 3-wave correction and then potentially a fractal of that same pattern. And if in fact this is going to materialize as a third of an even higher degree wave 3, you wouldn't expect this correction to be extremely sharp. So you wouldn't be looking for your typical 50-61% retracements. So technically what you have here are 5-wave moves with 3-wave corrections and progressively smaller corrective waves. So that would support the idea that we are gearing up to move into that third of a third, which is part of our higher degree wave 5 structure. Now, we had a question that was posed to us in terms of how do we kind of line up the wave counts in the NDX with the S&P. Excuse me. Gotta love the Steam Deck handy on deck. There you go. So if in fact we come to a 5-wave completion off of that March low, that would in theory complete a wave 1 of a higher degree. We would not be assigning this structure a degree that would close out the higher degree trend. Okay, is it possible? Sure, but that would need to be supported by some very significant catalyst, geopolitical risk event, whatever it might be. So if in fact we complete a wave 1 of a higher degree, that would put us in some sort of a wave 2 corrective move lower, perhaps back to the area of the previous fourth. Now in the S&P, if you are looking to get a wave count that's going to square up perfectly with the NDX and the XLK and the sectors that are leading this market, you're going to be a little hard pressed to do so. And if you're going to try to look at this move into the June 27th or even the June 13th low as a 4th wave, you would need to allow for some exceptions to a few key guidelines. And really the key guideline that stands out here is simply the guideline of the right look. Here's a move that if we were going to try to call this 1, 2, 3, 4, and now we're in wave 5 with the NDX, we would need to do something really funky like call this 1, 2, another 3, 4, and up in 5. But traders, if we just hide all of these waves, what does that look like to you on a daily chart? That looks like a pretty straightforward and textbook 3-wave move. So to get a wave count in the S&P that would square up with the NDX, really hard pressed to do so. So that leaves us with the idea that we are just now getting into 3rd wave completion in the S&P. The S&P will correct in some sort of a 4th wave while the NDX is in the higher degree wave 2. Then perhaps we'll see the S&P move higher to complete its wave 5 and then set up for a wave 2. Simultaneously, the NDX will have completed its highest degree wave 2 here, and then it will be in another 1, 2, essentially as the S&P is working some sort of a 1, 2, which is really not uncommon given the fact that the NASDAQ 100 has been leading this market recovery. If you take a look at net percent change on the year, comparing these two indexes, there's really is no comparison. So We continue to remain constructive on the market. I know a lot of people are looking at this technical overextension and suggesting that, perhaps it's time to short this uptrend. And, there's a lot of people who are interested in really getting aggressively short in this market. But I would propose that you take a step back and you wait until you have a good reason to do so. At this point, we don't really have evidence to suggest that the trend has come to completion and we're going to see some sort of major correction lower. In fact, we reviewed this last week that as the markets are pressing higher, we're continuing to see the market enthusiasm as the call buying extreme sets a new high as the markets are pressing into a new high. So until we have that classic divergence, which we noted into two major tops previously, I wouldn't get too excited on any downside possibilities. Now, before we move into the sector rotation and a macro overview, let's take a quick peek at a couple of other supporting charts here. So the XLK, obviously the XLK has been performing quite well this year, along with the NDX, and of course the Qs being an ETF of the NDX. But here we see a very similar wave count in that we have 5 wave moves followed by 3 wave corrections and progressively smaller corrective waves. In fact, the XLK actually did give us a 618 here in this most recent wave too. Given the fact that price action's been a little slow here, perhaps this is still some sort of ongoing wave too. But back to the daily chart, we do have implications for continuation higher. We're just essentially hanging out middle trend channel here in the XLK. In addition, let's take a quick look at Amazon. So here in Amazon, we have a wave count also, which is suggesting we are coming into a 1-2 in that higher degree wave 5, obviously supportive of what we see in the NDX and the XLK as well. Microsoft, here's another fantastic looking chart, which also supports the idea that we still have some gas left in this tank. Over to the daily chart, you'll notice that we have our highest degree, or I should say our higher degree trend channel here. This is the orange primary trend channel. We ran into completion of wave 3 here, 3 waves down into the March 23rd low. We then have a nice 1-2. Our third wave, let me go ahead and just remove all of our fib ratios. Our third wave took us to that spot on 1.618 multiple of wave 1, which is a very common third wave objective. Then we have, in addition to that 1.618 upside multiple, we also have that trend channel, which gave us a zone of resistance or an area of resistance. From there, we've been in a sideways period of consolidation, which really appears to be an Elliott wave triangle. And very kind of textbook 3 wave moves here, higher lows, lower highs, eventually looking for a resolve to the upside in some sort of a wave 5 zone. So we certainly have technical evidence here to support continuation in the markets. And we're going to continue to stick with the trend until, again, we have evidence to suggest it is time to try to go against it. So Netflix is another one we had a request for this morning. This is a possibly completed wave 4. We're pretty shallow in terms of 4th wave support zones. This could very well be still some sort of ongoing wave 4 situation. I would have preferred to have a move back to around 460 or even to 450 being a more psychological support level. And then, of course, the last chart we're going to take a quick peek at here is the chart of NVIDIA, and then we'll carry on from there. So in terms of NVIDIA, the move into the March low, we are looking at as a 3-wave structure completing a wave 2. And this wave 2, given the 3rd wave projections, is really supported by the highest degree level of trend. We have some fib extensions and projections rather that do support this move into 500 and beyond. It's getting a little bit extended on the short term, and I think earnings will give us a good opportunity to work some consolidation here. So we have surpassed our 3rd wave 1.618 multiple here in this blue wave 3. We're now pushing into a 200%. Looks like we have one final push higher, but then we're going to be looking for a series of 3-4, 3-4s. The 3rd wave 1.618 is up there at 621. Equality was down at 387, which we very quickly surpassed. So Semiconductors continue to perform well. Leading sectors continue to perform well and look constructive, technically speaking. So, guys, just be a little bit cautious with trying to chop against the Fed and the current trend that we have here in the markets. So, Terry, you want to save the day and
well, before you go, Bennett, why don't you take a couple of member or viewer requests here?
Yeah, certainly. I don't have the chat up, so go ahead and if you could call those out, that would be awesome.
So let's take a look at Square. That's one of your favorite stocks that you follow. I'm surprised you haven't been looking at that lately. That's for William.
All right, so
Square's broken out. Looks like it's broken out of its consolidation period quite nicely here.
You know, we've got two wave counts. One wave count suggests that this was a wave 4. It's still very possible. It's a pretty extended fourth wave compared to wave 2. If this was some sort of a fourth wave triangle, I'd feel a little more comfortable with allowing for that long of a fourth wave. That opens up the idea that perhaps this entire corrective move was just an ABC making up a wave 2 structure. Notice it took us right into the area of the previous fourth, very textbook support zone that we've seemed to defend and hold there. And off the weekly, you know, down to the daily, this has been an incredible move off of the March lows. We've got this initial 1-2. That 1-2 was about as textbook as you can get. Little directional 3-wave correction. Wave 2 position, very common. Your third wave took us to just shy of a 200%. This could still very well be an ongoing third wave. This might not even necessarily be post fourth wave consolidation. It is certainly possible. I don't see it as a strong possibility, but it's certainly, if you take a look at the fractal structure of this, you could very well square this correction up with this here and still get your 5-wave move with another 5-wave subdivision. So, you know, given the fact that it surpassed out 1.618, came just shy of a 200%, this would be my preferred count. But in the event you see a parabolic break higher, you were breaking up there, Terry.
Sorry, yeah, we all froze for a second there.
Oh, that's no fun. Let's see here. Let's take a look at the stream analytics.
You're good.
Okay. You know, it's a possible wave count, but this is obviously going to be our preferred wave count here. I'm going to bring in 2 trend channels. We're going to bring in our standard 1-3, really the origin here. If you were to look at your 2-4-3 channel, that's not going to give you a good representation of where to expect that 5th wave. So I'd just be tracking your upside projections here. If this is some sort of a 1-2 inside of that higher degree 5th, then you'll see that structure fits in quite well. So 135 support, wave count and validation of this possibility doesn't set in until 123. So this is still valid as a higher degree 5th as long as we remain above 123. You'll see out of this triangle, we have a nice little 1-2. That held the 618 retracement. All right, what else do we have there, Terry, in terms of...
Take a look at Facebook.
Oh, of course, I'd be happy to.
Communications sector.
Yeah, good old Facebook. So Facebook, I'm actually going to take you guys to the 195-minute half-day chart. A lot of people ask us, why don't we use 240-minute charts? Well, 195 minutes is exactly 1/2 trading day. We find that time frame to work quite well with working wave structures here. So we've got a nice little 1-2. This 1-2 can be counted as up in 1 and a flat in 2. You can also anchor your wave 1 here and look at this entire structure as a leading contracting variety diagonal. You'll notice that 3 is in fact shorter than 1, 5 is shorter than 3, and 4 is clearly a smaller net percent retracement than 2. Regardless, implications here are the same. This was actually a chart that we used in one of our most recent courses as a good example of multiple wave structures, both having the same implications. We, from there, have a nice little 1-2, 1-2. Here's your acceleration gap and a third of a third. We've got wave 4 scoring up beautifully. We've got wave 5 green wave 5, demonstrating equality to green wave 1, very common when you have that extended third. That took us into a third wave target, which was right into 200% of the magnitude of wave 1. We then have a sideways consolidation, which overall found support where? Area of the previous fourth. And of course, so you can see that low around 206 into the support zone of wave 4 here. We also had that represent just shy of a 38.2% retracement, which is another common fourth wave retracement target. And from there, it's starting to look a little bit messy. I just see this as a fourth wave consolidation. It's just kind of been sideways. Perhaps some sort of triangle playing out on the 1 hour chart. This support holds 252, could give us that move to the 293 upside projections. So that's Facebook. Facebook still supports another push to the upside as well, along with the rest of the markets.
All right, take a look at Adobe, please, for Todd.
I'd be happy to look at Adobe. Taking a look at good old Adobe. We're going to jump over to the daily chart here. And well, again, we're going back to the March lows. It's the most common place to be starting an impulsive move, especially after the corrections that we saw into that low. Here we have a nice 1-2. If I bring in these smaller degree structures, of course, with the press of a keystroke, good old motive wave, you can see that our extended wave here was actually wave 5, which is completely fine. And off the daily down to the 195, again, notice this third wave just shy of a 200% as compared to wave 1. We got through our minor degree trend channel. Once we got through our minor degree trend channel, we came just shy of that extension. Then we consolidated here in the form of an Elliott wave triangle as we set lower highs, higher lows. The orthodox low of that fourth wave represented exact equality to the magnitude of correction here in wave 2. Very, very common. And in addition, if I bring this up for you guys, this is comparing the time elapsed in wave 4 compared to wave 2. There's your 1.618 4v2 time extension multiple. That's another common target. And now we're trying to press higher in a 1-2. This would put us in 1-2 of the higher degree wave 3, with implications if we get through that 500 level, which is obviously psychological resistance. We've got a good zone here between 525 and call it 547, 550. So 500, 525, 550, really not out of the question if this market continues to hold to the upside.
Okay, let's switch from technology back over to TLT. We haven't talked about treasuries, bonds, and things like that lately. We're going to let Alex talk his macro stuff, but I do want to touch on that while I've got you. And then I'll step into sector rotation and show
absolutely
a couple of tricks there.
So, in terms of TLT, the most recent, I'd say, clear wave structure that we have starts back in October of 2018. We have a move up, we have a three-wave consolidation, and then what do we have? An exact measured move. So, simply put, the magnitude of this move, if you're new to wave theory, you project it from that correction, you'll notice that's right where we landed there in that upside. So, and that's going to work if you're on log scale. You can draw it out like that. Now, where this takes us in the higher degree wave count, I think is a little bit subjective. After completing that measured move, okay, after that potentially three-wave move, we can squeak out 5. We're now in a sideways period of consolidation, which could very well be some sort of X-wave triangle. You'll notice that this is 3 waves, this is 3 waves, this is best described as 3 waves. This is starting to look a little more impulsive, but we have a wave count and validation at 153. We've got your alternating 61.8% relationships of E versus C at 160. So if this is going to hold as an X-wave triangle, we'll probably see that development here shortly. My concern is when I try to square this wave count up with that of the 10-year yield. So obviously, you can see here, this wave 4 it has resolved into a potential leading diagonal down in some sort of a 1-2. This would call for lower in yields, higher in bonds, and if I take you back to TLT, this wave count kind of supports the same idea that we're gonna see a move higher to complete the structure. So I do think that we do have a strong possibility that we see a move lower here in yields, higher in bonds. But again, this is inside of that fifth wave on the weekly and even the daily charts here. So what do you guys?
So what do you think? You want to chime in on this, Alex?
Yeah, please, sir. We'd love to have you
on the TLT.
Yeah, I mean, I'm still not clear on a yields front.
Yeah.
I have been bearish for last few months, as our members know. Are we there?
Yes.
Yep, you're there.
Oh, okay, sorry. I have been bearish on yields for months now, but I'm starting to look, especially what is going now. I have ongoing triangle in 10-year yield, but looking at the inflation perspective, I will need these yields to go a bit lower to confirm a new low, but sooner or later, I think these yields will go up and will force Fed to do a yield curve control. And I'm looking in the next few months, maybe even earlier, for something like that to occur. So I will not give much on the upside for the TLT. And in general, if the Fed do the yield curve control, this market will be capped for the next at least 2 years. So probably the people which are trading bonds will switch to some other asset class, because we will not have the move in the real yields because of the cap. So I have a triangle there, fourth wave triangle, or if we can square this move up in A as a wave 1, this can be just an ABC. I have also that as an alternate count, and we are starting to move higher. Of course, wave count invalidation is your blue wave 1. This is relatively high, I think at 1.2 or 1.6. So of course, if we cross that, we will know that the yields are going to start to move higher. But I think at that point, Fed will definitely announce the yield curve control and start to cap until the economy recovers.
Yeah, and I think that's kind of what we were talking about a couple weeks back and tracking that triangle here. I got a little concerned when we broke through, obviously, wave count and validation here. Being that this is a wave count on 10-year yields, the triangle obviously is still in support and it's still valid on TLT. So, allowing, I think, for an exception here to support the ongoing triangle is probably favorable. What do you guys think?
You mean on yields or on TLT?
Yeah, the chart that I have here, 10-year yields, you can see that I was tracking this as A, B, consolidation, and C. We were looking for the move down here in D. We broke through the low of B.
Yeah, we broke. So we either we are in a larger degree or the same degree B wave, so we can extend this triangle to last a little bit longer.
Yep.
So you can move your B where your D is, and then try to work out and look for a little bit larger triangle. But looking at the outlook, I don't think that so your wave A will be up, down will be wave B. So we're going to consolidate a bit more in C, D, and E. But I'm becoming a little bit more suspicious. Are we going to see a new lows? Looking the situation across the front, so I'm going to be very wary about development there.
Yeah, even if we do press into that new low, it's going to be a higher degree wave 5. Yeah, so it
exactly.
wouldn't be a long-lasting event.
Yeah.
What were you going to say, Terry?
I think Yeah.
No, I was just going to say this is great for new mortgage applications, refinancing, keeping these interest rates low. It actually probably will turn out good for the consumer and the home building industry. Keep these interest rates low. So, all right, let me jump over and pop up sector rotation real quick, and then we'll
Absolutely.
let Alex talk about gold and some macro things. So,
The
yeah, you got me
screen is
going there.
yours.
Hey guys, so take a look at this chart here. This is the S&P, this is NASDAQ. So Bennett's gone over all his wave counts and stuff like that. The little green box is last week's price performance, and these last two little candles right there, that's this is the S&P, and this is the NASDAQ. So you can clearly see the NASDAQ retook control of the upside away from S&P. Last week we were seeing industrials with really gaining quite a bit of ground, and technology was hanging out over here. This week, and this is just these 2 days here on this price performance chart here.
Yep.
But we've got technology back up here, technology communications back up here in the front lead. Interestingly, here's Amazon, right? This is XLY. So we've got XLY, XLK, XLC. These are our sector leaders. Let me pull this chart back over here. This is our weekly sector rotation chart where we're keeping track. And we've been seeing some declining momentum in XLY and XLC, but starting to get a little bit of I guess a slowing down here. So technology had been declining in momentum, started to form a hook a couple of weeks ago, hooking back and forth, kind of nonchalant, but not the key thing here is it's not giving up any relative strength. Technology is just still holding a secure place in relative strength. They look like communications again. That's Facebook, Netflix, and several other stocks, and we can look inside there. But several of those they've been weakening a little bit, but still holding strong. So these stocks in these four sectors, and Amazon is in this as a discretionary, but you've also got your materials sector here. These guys with all higher relative strengths, they're the ones with holding the market leaders. So over the last couple of weeks, we saw industrials making some pretty significant moves, day over day, but it's still in this improving quadrant. It has a little bit of a lean towards increasing relative strength, but it's more of a southeasterly heading than it is a northeasterly heading. So yeah, while I think some of the market pundits were getting excited, saying, "Oh, we're rotating out of tech and into the defensive sectors," I'm like,
little premature, yeah.
Way jumping the gun. And they had to be day trading, looking at day trading timing signals to think anything like that. We want to wait and look until we see something much more aggressive before we get out. So we're going to tread cautiously, but we're going to remain holding all of these trades and positions. And if we put new trades on, you may be seeing some of these trades in sideways consolidations where some of those wave fours are turning into triangles and things like that. But again, Bennett's showing clear evidence that we've still got another push higher in wave 5 in the NASDAQ potentially coming. And I think you'll see that happen here with technology communications and those guys jumping back up. These are two ETFs, IVE and IVW, two ETFs that track growth stocks versus value stocks. So value stocks are typically ones that give you high dividends, and growth stocks typically give you low dividends, but growth stocks are the ones that grow their price appreciation quite dramatically. And we've been touting this for a long time, that growth is still outperforming value. We did see some momentum rising in value stocks while we saw momentum decay in growth stocks. But because I'm not seeing relative strength swap over between these two, to me, there's no reason to get out of the growth stocks and back into value. As a matter of fact, I'm actually seeing a reverse hook here, which indicates that value is heading back down again. So I don't see any rotation out of there. Let's take a look at this materials sector, which is doing pretty good. And we've been tracking gold miners quite a bit, and Freeport McMoran has if you've been with us here for the last several weeks, I started talking about it somewhere back here, probably early July, saying, look at this horizontal, nice northeasterly vector going on with Freeport. Newmont has been decaying. Newmont was a big leader. Newmont's a big gold play, and a lot of the gold miners started following Newmont down in this decaying momentum and relative strength. But a lot of the silver miners actually were pushing higher. Freeport, I think, is into copper more and molybdenum and some other stuff. I don't really know what their gold share is, but I don't think they're certainly not doing bad. And so over the past several weeks, this horizontal, this almost horizontal move, this slope here, just means very strong continued growth in terms of relative strength, pushing this guy further and further to the right. So that's been a good play. Along at the same time, there's been quite a bit of group of other stocks move into this leading quadrant, namely Linde, Dow, Air Products. You know, these are industrial gases, petrochemical plays, Dow, DuPont, or sorry, I guess it's not Dow, DuPont anymore. I think they separated again. DuPont in here, and LyondellBasell. So a lot of these petrochemical companies actually are benefiting a little bit, I think, from low energy costs, which is and feedstock costs. A bit of a struggle, obviously, when the price of oil and natural gas collapsed and market demand went down. But as market demand starts to pick up around the world, the products that these companies are producing is also going to pick up around the world. Here's a look at that gold miners index real quick here. If I can get it to pop up, there we go. And this is not all of the ones that are in the list, but these are, because this is a international ETF that I was pulling from. I had to go and selectively remove some of the ones I didn't have data for. These are mostly the U.S. plays here. I've been pushing Kirkland Lake Gold onto Bennett to keep track an eye on the wave count here on this one. Because what I saw here was that we had a lot of maturity going on as all of these gold miners pushed up here into the lead throughout the summer here. This is June. This is June 5th, right? Look at all of these guys up here in this lead as we saw gold start to take off. But then they all rolled over here, and this rollover in this group right here is mostly gold plays. They rolled over as gold consolidated a bit, but now gold looks like it's starting to turn and head north again. So you can see another hook forming in Newmont, Barrick Gold, and a few others. They may be positioning themselves to make another pass back up here into this leading quadrant. This little group over here is mostly silver miners and stuff, but and Freeport's not on this list, but Freeport's moving across right here. They're not listed in this for some reason. Like I said, I've guessed probably because their main production is not gold, but they've been doing quite well lately. And here's consumer discretionary. So what's been going on here? I think that's why we're starting to see that we're seeing Amazon rotated out of the leading quadrant and saw a bunch of momentum decay through June and the summer. But right about here, middle of July, we see a hook forming in Amazon, a little bit of a sideways motion, and now what I'm seeing is clear movement back up to the north. Maybe a little wiggle just this week here, but certainly Amazon, I think, still got another leg up. Lowe's losing some momentum here. Home Depot actually didn't they didn't they have a big price drop yesterday? I didn't see what happened there. Yeah, I think they closed down a little. They closed down a little bit, but excuse me. Just look at their price performance where they are, right? So one little blip here does not end the. It's not a roadblock. Okay,
does not make a meltdown.
No. But I'll tell you what, buy the dips here on these guys, right? These are your superior performers. If they'll pull back anywhere near this 50-day moving average. This is the 20-day simple moving average, the 50 and the 200. But that's a time to get back into these guys because they're all still in the lead, right? So anybody to the right of this vertical line here has got relative strength ratio outperforming the S&P. And if that's your goal and you're trying to outperform the S&P, you want to be holding these stocks. You want to be invested in these stocks that are outpacing the S&P. So let's take a look here into technology, because we've been covered a couple of these things in technology already. Here's Adobe. So one of our members asked about Adobe. Here's Microsoft. So down here in the weakening quadrant, continuing to lose a little bit of momentum, but this typically means we're in that fourth stage consolidation. I think when I see momentum decline, I typically think on the price charts, I'm more moving horizontally, right? So I'm moving, this is your daily, not the weekly, but let's put it on the weekly. I'll just show you the weekly candles, right? So we've been in a period of consolidation on the weekly charts here for about 6 weeks in Adobe, right? We get a break above this 468 level. I think there's your fifth wave taking off there, and so that pairs up to this weekly rotation. NVIDIA has got its earnings report, like Bennett said, coming out this afternoon, but NVIDIA's NVIDIA's been one of our true leaders for a very long time. Still holding on to its relative strength, losing some momentum here again, coming into the earnings play. We'll see where this heads us, whether we're going to continue to shoot right back up north, or if it misses earnings and for some reason it takes a move south. I will say, with the relative strength so high, NVIDIA's got a lot of room. I wouldn't just chunk this stock depending upon whatever the earnings say. If earnings came in negative, I wouldn't throw it away today. This stock is still going to continue to outperform. It's not going to move from here to there in one step. That's just not possible. And we can kind of see the distance of these tails kind of gives us an indication of the inertia in the stock as to where it can move. So Apple and Qualcomm. Apple is hardware, tech, and peripherals in sub-industry in technology. And it's not in the communications. So it's in a different sub-industry. But and I've been seeing that one pushing really high. So Apple's doing well, and even Salesforce, right? So we got that on here. Let's take a look here at semis, and I'm going to give it over to Alex after this. I'm not going to go through all of these guys. If you want more of this, please sign up and join our premier subscription service. I do a full analysis of this every week, and we go through this with our members in the member webinar in a much more detailed fashion. But yeah, here's semiconductors. Look at semi. Here's the S&P, right? So benchmarked against the S&P, with the exception of OLED, Micron, and Intel, everything else on this list is got a relative strength ratio in excess of 100, right? So that means it's outperforming the S&P. So you can't go wrong owning in these semiconductors, and there are several of them in here with uptrends, continuing uptrends. You got Taiwan Semiconductor, you got AMD here, Lam Research, a little bit going sideways there. Xilinx looks like it's kind of rolled over a little bit there. What was I looking? I was looking at another one here, Qualcomm. Yeah, Qualcomm. OLED is actually right here at 100, and so I'm seeing OLED move out of this improving quadrant and just now breaking the boundary. So if you you don't want to buy into this stuff when they've already well outperformed, but I like seeing them as they cross over this boundary right here. You might put a wave count on this one, Bennett. Take a look, and when you get put this on your list, we'll take a look if we finished a consolidation period here. Now, are we ready to break higher? Your technical resistance there is at 221, but this guy could be setting up a formation where it's sitting right here around. That's a weekly. This is a weekly chart, so that's a 50-week moving average. Let me drop this down to the daily. There we go. So here's OLED on the daily, on your daily candles. And your daily candles, you can see that it basically, I would say it broke out right here. This right here, July 31st was the breakout period. Here's your cup, your handle, your pivot point. There's your breakout. Now it's in a little period of consolidation here, setting up maybe for another move higher. So, all right, that's it for me, guys. I'll give it to Alex and let him cover gold and whatever else is on his mind.
Very good, much appreciated, Terry. Yeah, Intel's starting to get into almost into value territory down there, so we'll keep our eyes on it. Hey, could you make him presenter for me? It's
I'm working on it.
I appreciate it. Awesome. Just watch the opening bell here. S&P just teetering on last night's move. So, Alex, it's all yours, sir.
Sure. Okay,
right.
Do we see the chart?
Yep.
Okay, let me just remove this and we can start. Okay, so we are going to do a little bit of macro overview and some of the currencies and some of the cryptos. So this is the dollar index, and we at the trading analysis has been relatively short dollars for a number of months back. And what I see here is a very nice defined channel in the third wave reaching this 1618. Also the positioning, if you log the CFTC data and some other metrics are telling to us that actually dollar is oversold in the last, I don't know, 30, 40 years. And also the number of longs on euro are hitting 200,000 contracts. And I think we are close, looking at this metrics, to close this first sequence very soon. I'm still going to be looking for triangulation here, so potentially a little bit more duration in time. I still have a triangle, though I would not like this B wave starts to move a little bit lower, because I can allow this B wave to be below the last lows for just some time, but if we get and start to move a little bit lower, I will have to adjust the wave count. In any case, if we start to move higher, I don't see that much sustainable. I will rather see a three-wave pullback in a wave C, D, and E, and then finally a final resolution to the downside. But I don't expect, looking all of these other metrics, that this wave down will be relatively long. Okay, so be careful, because dollar is very oversold. And I think we can get something more abrupt in one point of time on the upside to these two pretty important resistance levels, up to 97.81 or 95.40. So I'm expecting a sharp ABC pullback, but in general, overall, I'm gonna stay bearish on a longer term on dollar because of the macro perspective and what's going on with treasuries, what's going on with deficits and some other stuff which we can cover in the next Wednesday. So I'm going to show you also why I think we are not very far from dollar reversing or stock market reversing, because if you look some other metrics, this is the chart of oil, and this is the chart of futures on copper. We have been long copper for our members on the Premier, and we explained that this is possibly a fourth-wave pullback, and now we see a nice push up, but I don't also see this to be sustainable on a mid-term to longer-term basis without any sizable correction. Okay, so I'm expecting a corrective pullback soon here, maybe a little bit more advanced, and oil is also kind of a chop moving upside. I think this is probably an ending diagonal, and we are going to maybe do a small push on the upside and then potentially reverse strongly. So looking all of this from the macro perspective, chart of oil, chart of copper, chart of dollar, and euro dollar as well, which I will show you, I don't think we are very far of a relatively significant pullback on all of these assets classes to counter the dollar rally. Okay, same in euro dollar. I can still allow this to be a B wave on the upside, but I'm expecting a push down in CDNE, and I want to see this very quickly happening today or tomorrow. In the case we go upside, I will look for 127 ratio, and if we surpass that, I will have to look for this fifth wave and then do a smaller triangle here, which I will not like to do because of the right look of the full swing on the upside. Overall movement in euro, I think it's up, and but I expect some larger corrective pullback very soon, either in the wave 2 or in the wave B, and a further continuation on the upside. So even on some other metrics, which is very interesting, we were looking this dollar yen chart as a possible ending diagonal, because 5 waves up in this possible A wave. By the way, dollar yen chart is very difficult one for the next 4 years, 3 years, for the last 3 years. And we are in a very drawn out sideways consolidation. So God knows what is this. I can just maybe try to decipher and diagnose a smaller waves within it. So for now, I have this as a 5 waves up in A, 3 waves down in W, a nice push up in X, and then I have a B, and possible ending diagonal in C, which actually foretells a little bit more dollar move, because lately dollar yen is even more mixed because it tracks S&P and also it tracks dollar move lower very much. So I guess also dollar yen can give some clue about the dollar overall, because I'm seeing a bit more correlation with the dollar move. And if we are going to see a last move down in dollar, that might be also the last move down in dollar yen. We might go initially up, then chop until the stocks move lower, and then continue on the upside. So this will be on my radar, and I will show you one trade that we are planning just for fun, that you can see how we are functioning in the trading analysis trading space. So this is Euro New Zealand. So we are looking for a 5-way move on the upside, which is very clear. After a nice move down, as you can see here, very difficult wave count. You need to wiggle yourself with it. So there is a leading diagonal in 1, up into a nice sequence down in wave 3, triangle 4, and the wave 5 finished here. So from there, we can count clear 5 waves up. So we are looking to put some longs on a pullback, because I think this is just a wave A down in B, or some type of a pullback, because it can be A triangle B, C, whatever it is. We will look to go and to buy euro against the New Zealand for this possible pullback on the upside. As the crypto is concerned, this is a very interesting chart. I know my members, or our members, sorry, will definitely try to put some cover on me regarding showing this chart, because everybody is so bullish cryptos. They will probably kill me for this, but this is
Alex.
Yeah. This is unforgivable for me. So sorry guys, but I'm looking always both sides. So I'm gonna tell.
All right, we should be back. We'll see what happens here. Terry, Alex, I think you guys got disconnected. Hey, I do apologize for the little bit of a technical glitch there. Looks like we lost connection to our VMix caller, so we do apologize. But guys, thank you so much for tuning in once again. And went a little bit late. You can see the market's already open here, but we'll continue to track it. If you're interested in more of what we do, you can check us out at tradinganalysis.com. Be sure to give the video a thumbs up and subscribe if you are in fact interested in the content. It lets the algorithms know and distribute it accordingly. Looks like we've got our team back here, so let's see what happens. Alex, are you with us? I guess not. All right, guys. Hey, thanks again for tuning in. And also subscribe and turn on notifications if you're interested in knowing when we go live again. We'll be back with you guys next week, same time, same place. Thank you so much for tuning in, and catch you guys on the next stream. Have a good one. Take care.